Nilesh Shah of Kodak AMC joins us now. Nilesh bhai, from no news to a lot of news, geopolitical tensions, maybe money moving back into China, crude spiraling up. Are we in for a tough trek now? Do you think easy phase is over now? The volatile and the tough phase has started for market.
Undoubtedly, yes, Nikunj bhai. We are at a valuation which is at a premium to others, and it is discounting almost everything optimistically, be it geopolitical, be it local. And as we have seen barrage of news, obviously market will take a breather to discount the same. So yes, there will be some tough time for the market in the days to come. But again, as Sandeep mentioned, this is near term. As events shape up, it will shape up the market. The longer term story remains intact. If at all, it can improve further if we take advantage of the events which are shaping up.
So what would be the dominant moving part for the market now? Will it be global? Will it be earnings? Will it be liquidity? What would be the bedrock on which now markets would be perhaps charting their next course?
So one, obviously, the focus of the market will be, are foreign portfolio investors going to allocate out of India to China? And at the same time, they'll have to keep in mind that now with both the engine firing in MSCI emerging market index, which is China and India, almost contributing little under half of the index, will more flow come to MSCI emerging market index? And if it is a passive flow, then some of it will come to India. So one factor to watch out will be flows from the foreign institutional investors. And the second thing obviously will be earnings. The June quarter earnings were subdued. In the September quarter, people will be discounting the fact that monsoon was quite good and it has impacted some of the numbers. But now we are in a festival season where, for example, in two-wheeler, a bulk of the sales will happen during next 30, 40 days. So commentary of management and earnings will be very, very crucial for the market.
Nilesh, then what's the expectation when it comes to the earnings?
The overall earnings expectation for FY25 is about 11 to 12%, touching somewhere around 1100 to 1125 EPS for Nifty 50. As I mentioned, the June quarter numbers were relatively subdued. That means heavy lifting has to be done in the second half of FY25. The September quarter will get impacted by rainy season. Rains this time has been abundant and it has impacted movement of goods. So it's not only the September numbers, but also the commentary by the management as to how they see festival season pick up.
So, Nilesh bhai, there is another moving part which we have ignored, and which is the impact of interest rates. Interest rates are certainly headed down. And when interest rates they go down and when inflation is just about okay, that always leads to a rally in risk, which is equities, metals, and growth stocks. Do you think we should not forget that good news also coming? Because what has been a headwind now becomes a tailwind, which is declining interest rates?
So, Nikunj bhai, you are absolutely right that interest rates do play a part not only on earnings, but also on valuation. The point is that market has been discounting Fed rate coming down since June 23. And it was always a question of when will Fed cut rate and not whether will Fed cut rate or not. So there was deferment from June 23 all the way up to September 24. But it was always question of when and not if. And hence, to a great extent, not only the longer end yield curve of American Treasury, but also the rest of the world kept on discounting that interest rates will come down. In the Indian context, again, corporate India is not heavily leveraged, bearing few companies or sectors, and hence impact this time of lowering of interest burden is unlikely to impact earnings as much, and there will be only one side impact on the valuation.
What should one do who is now convinced that, okay, the party, if not over, we are in the last lap of the party? Is it now time to take a deep breath, very deep breath? And if you have not taken another deep breath, take another deep breath and then make some shift in terms of asset allocation, because the volatility is back. And suddenly, if mid and small cap stocks are underperforming, is it time now to shift out of asset allocation back to fixed income and other assets?
So, Nikunjbhai, it is always important to meditate. A peaceful mind is far better than a restless mind. We have been saying for some time that please follow quality over momentum. Please invest in reasonable valuation across expensive valuation. And please consider investment in high floating stock market discovered prices rather than low floating stock controlled holding and, let's say, market manipulated prices. This strategy should work well. Obviously, when we were saying this for last 2-3 months, we were not sure that it will play out as early. But ultimately, stocks are slave of earning power, and there will be sector rotation from micro caps, mini caps, small caps to large caps and larger mid caps. There will be sector rotation from, let's say, defense, railway, PSU, low floating stock counters, capital goods, real estate, to banks, FMCG, telecom, metal, consumer staples. So this sector rotation and market cap rotation is likely to continue.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.